You know, buying a home is probably the biggest financial milestone in your life, but getting the mortgage to actually pay for it? Wow, that can feel like one of the biggest hurdles you'll ever face. Today, we are going to break down how a key professional can turn that super complex process into a really clear path forward. So, does this sound familiar? You found the perfect home, but now you're staring at this absolute mountain of paperwork and a sea of lenders and rates and terms. It is so easy to feel completely overwhelmed. I mean, where do you even start? Let's think of the whole mortgage process like a maze, right? There are countless paths, tons of potential dead ends, and one huge prize waiting for you at the center: the keys to your new home. And, like any good adventurer, your very first step is choosing the right guide. For most of us, this decision really boils down to two main players: your trusted bank, where you probably already do all your day-to-day finances, or a mortgage broker. But the real question is, are they really playing for the same team? Okay, so let's get a clear definition on the table. A mortgage broker isn't actually a lender. Instead, think of them as a licensed professional matchmaker. They connect you, the borrower, with a whole network of potential lenders. And this right here is the fundamental difference. A bank employee, they can only offer you their bank's products. Their allegiance is to their employer. A broker, on the other hand, well, they're not tied to any single institution. Their primary allegiance is to you. So that difference in who they work for, well, it leads directly to the first huge advantage of using a broker. They unlock a world of options you would probably never find on your own. A bank specialist basically offers you one menu. A broker gives you an entire food court. They have access not just to the big banks, but also to credit unions, trust companies, and these things called monoline lenders. And these guys only deal in mortgages. They don't have fancy branches or other banking services, so their lower overhead can often mean better rates for you. That variety is absolutely key. And this is where having all that variety becomes so crucial. Because let's be real, not everyone fits that perfect standard mold that banks are often looking for. What if your financial picture is a little more unique? Like, what if you're self-employed? Proving your income isn't always as simple as just showing a T4 slip, and that can be a real hurdle for the traditional lenders. Or, hey, maybe you're a newcomer to Canada. You might not have built up an extensive Canadian credit history yet, which is, a primary requirement for the big banks. And what happens if your credit score has seen better days? A score under 600 can often lead to an automatic no from a major bank, even if your income is totally solid. Okay, so here's the bottom line. Brokers are specialists in these exact scenarios. They know which B lenders or private lenders have more flexible rules. They're willing to look at the bigger picture of your finances, not just a single number on a form. But it's not just about getting a yes when the bank might say no. A broker can also save you two things everybody wants more of: time and money. And this isn't just for complex cases. This is a huge advantage for every single borrower out there. Think about the efficiency. If you go mortgage shopping on your own, every single application means a new inquiry on your credit report. And guess what? That can actually lower your score. But a broker, they pull your credit just once and can then shop that single report to dozens of lenders. It's just smarter, and it protects your credit health. All right, I know what you're thinking. What's the catch? Right? This sounds a little too good to be true. How do these people actually make their money? Well, for the vast majority of borrowers with good credit, the answer is pretty simple. You don't pay the broker. That's right, the lender you end up choosing pays the broker a commission for bringing them your business. So you get all this expert guidance without it costing you a dime out of pocket. And the savings don't even stop there, because brokers deal with lenders in such high volume, they often get access to special, unadvertised rates. They can also negotiate to lower fees on your behalf. That negotiating power and access to volume discounts can literally save you thousands, even tens of thousands, over the life of your mortgage. Which brings us to what might be the most important point of all. It's not just about the rates and the access. It's about having a true expert, a real advocate in your corner. I absolutely love this analogy from our source material. A mortgage broker is like a Sherpa guiding you up a mountain. They know the terrain, they help you avoid the pitfalls, they carry some of the load for you, and they translate all that confusing industry jargon into plain English. And that guidance is backed by a really powerful legal concept: fiduciary duty. This means they have a legal and ethical obligation to act in your best interest, not the lender's. So if there are two mortgage options, they are bound by law to recommend the one that's better for you, even if the other one would have paid them a higher commission. This slide just lays it all out side by side, and it's so clear. A bank specialist works for the bank and doesn't have that fiduciary duty to you. And believe it or not, in some places, they aren't even required to be licensed. A mortgage broker, on the other hand, works for you, has that fiduciary duty to you, and absolutely must be licensed and educated. The difference in accountability is just crystal clear. So at the end of the day, it all boils down to one simple question. When you're navigating that mortgage maze and making one of the most significant financial commitments of your entire life, who do you want as your guide? Someone who works for the institution, or a licensed expert whose legal duty is to work for you?